Hey guys, welcome back to the channel. Today I will be providing a long-term market update for Ergo. So in this video, I will be talking about the Ergo Bitcoin ratio and specifically this very key level coming in right around 11,000 satoshis as our support. I'll also talk about Ergo on the weekly chart, covering some moving averages and my general takeaways into the next few months. So if you guys enjoy the content, make sure to leave a like and subscribe. Also, by the way, this channel is sponsored by the cryptocurrency exchange, FTX.us. You can check them out in the link in the description below. So first, I do want to start off on the Ergo Bitcoin ratio because I think this is a far more important chart to be watching out for, mainly because this is coming in right at a very key level right now. Again, the 11,000 Satoshi level, which corresponds to both the previous range high that we spent months consolidating in, as well as this green line, the 200-day simple moving average. So all the way back here in December of 2021, Ergo Bitcoin entered this longer term range with the highs being around 11,200 satoshis and the lows being around 7,200 satoshis. So what happened was Ergo basically just consolidated, oscillated from the highs down to the lows, back to the highs, down to the lows, and just had this pattern of fluctuating between this range. And then eventually we did get that breakout back in August. But since the breakout point, Ergo Bitcoin never had a retest of that zone. But now we are getting that retest. This is the time where buyers and demand do need to start to step in. And this is really where we need to see a higher low start to form. So you can see again, if we can bounce off of this region, that would be a longer term bullish sign because we would basically be flipping this from resistance in April as well as December back into support. And that would be an argument to be made for the bulls again, because we could also have the play of a higher low and a structure that really does start to weaken this big downtrend that began with the highs back in September of 2021. So that is specifically what I want to see happening over the next few weeks for me to be bullish on Ergo. But if we don't hold this region and we do start to fall back into this range, then I would consider the next level of support coming in around 9,000 satoshis. And at that point, I would just suggest that maybe we have a longer period of time to go consolidating and moving sideways before ultimately getting a longer term reversal. So now I'm going to switch over here to the Ergo USD pair, and on the weekly chart I want to focus on these two moving averages. So the green one is the 21 EMA, the red one is the 20 SMA. I've been talking about these in a lot of my Ergo videos, and these have been very good indicators throughout the bear market. Basically, when we first broke back below them in October of 2021, Ergo actually flipped them right into resistance on these candles, coming up into this region, rejecting off of it, consolidating under it, and then eventually turning over. And then we had that lower high back here in April, a move coming up back into these resistance levels, and then ultimately rejecting. So on this brief rally that we had just a few weeks ago, Ergo was able to get back above these moving averages, but notice how on this retest that we had, Ergo was not able to actually flip these back into support. And I really just want to focus back here in December. When Ergo was below these moving averages, it did have the move back above it, and then we did reclaim it and then flip it into support, several retests, right? We had a move right here in January retesting the moving averages and then a continuation higher. And then we had another retest right here in April. Notice this big red candle, the wick coming all the way down to this region. Buyers started to step in at this level, and then from there we started to move up higher. But that is not the case on this time around. In fact, we fell right back through it and then actually flipped it back into resistance, which signifies to me that this was a failed breakout, and in fact we might have a little bit longer to go, going sideways in this longer term range before ultimately having a more convincing rally, a more convincing breakout. So this longer term range does go from $1.68, that's our support, to the resistance all the way around $4.28. And I've been talking about this range extensively in all my Ergo videos because this is a very significant range. Ergo has spent basically 40 weeks within this zone, first entering it back here in January, which tells me that Ergo is within two very strong levels of support and resistance, and any move where we do eventually break out above or break out below will be a very powerful move. And one of the things I talked about with Ergo a few videos ago is how closely it resembled Cardano from the previous market cycle. Now I know they're completely different assets and we really can't make that comparison, but with Ergo we really don't have a previous bear market that we can look to and analyze. So what I want to look here at is the previous market cycle for Cardano, not because they're any similar in the fundamentals or they're any similar by any shape or form, but I just want to look at the structure of what's actually happening during the bear markets. So with Cardano, you can see that same pattern where on the weekly chart, we basically oscillated from the resistance back to the support, to the resistance, to the support. And it took a very long period of time for Cardano to eventually have this move, this breakout above the resistance. And then when we had that retest, that's when this was a very powerful, a very significant sign that we were ready to continue this big uptrend and in fact put in a new all-time high. So even though they're no similar in any shape or form, I'm looking at the structure and how they're very similar in terms of the resistance and the support oscillating between the range on this weekly time frame and building this longer term base during the bear market. So switching back over here to Ergo, again, we have had that resistance held. We've gone down to the support, back to the resistance. If we do have another move back down to the range lows, look to see if Ergo can hold support off this region and start to form a double bottom, a bounce off that as support. And then eventually, if we do have a breakout, either to the upside, breaking above it and then flipping it back into support, or to the downside and then flipping it into resistance. When we do get either of those moves, it will be a very powerful signal, and that's exactly what I'm going to be watching out into the next few months. Now, to conclude, I will say that I do slightly favor the bullish side, the bullish narrative of a breakout above the range, mainly because I do not believe that Ergo is going to have an extended move, a continuation of this bear market. I think it has exceeded expectations for the bears. We certainly have had a pretty long period of decline, definitely a move to the downside that is enough and significant enough to filter out all the bull market euphoria and really start to shift the sentiment back to the bear market lows. So I hope you guys did enjoy the content and the analysis. Once again, check out our sponsors in the link in the description below. This channel is partnered with the cryptocurrency exchange, FTX.us. I hope you guys did enjoy the content. As always, I will see you in the next one.